Friday, after some buy signals occurring in the Dow as well as the other indexes, had the opportunity to come back up and close above the T-line. But the fact that it closed back below the T-line was an indication that the bullish strength had not yet confirmed, number one. And number two, when it did a Doji type day, it allowed for a much stronger analysis of what the direction of the market would be based upon the Doji rule, that prices will usually move in the direction of how they open after a Doji. The lower open today indicated you definitely did not want to be going long, and that you might want to take a look at some more short positions, with the idea that if it failed the T-line, it might be coming back down to test the support level of the 200-day moving average on the Dow. That same scenario was more visual on the NASDAQ, with it failing the moving averages, the 50 and the T-line. Today's gap down could be putting the prospects of a blue ice failure in place, meaning when it came down and fell through the ice, it came back up and tested to see if they could find the hole they fell through. When they fail, they go to the bottom of the pond, which is the next support level. So right now, based upon another Doji in the NASDAQ, if the pre-market futures open lower tomorrow, we're still heading down to this level, meaning you want to maintain your short positions. Knowing that the market was selling off and that stocks like Tesla did a little Doji gap down, and not only did it do a Doji gap down, but notice it was closing below this support level, giving the prospects of another strong move to the downside. Investors could be prepared by seeing it closing at this level below the support level after a strong sell signal, but there would probably be more downside. You could be shorting or buying puts at that point. Identifying that same sell signal in the NASDAQ, or I'm sorry, in Labu, the biotech ETF on Friday, also is an indication that if things opened lower, that you could look at biotech stocks to see if they were going to be good shorts. Now, if you'd shorted biotech stocks and or Labu, very obvious that if it breaks this level, we've got another wave one, wave two, wave three in progress to the downside, meaning you could short Labu and or any biotechs that are also showing good short positions. So do you hold long positions in a downtrending market? You can when you can identify patterns, such as the J-hook pattern in HE or HAE that we recommended. And what's our criteria? As long as it stays above the T-line, we can stay long. This allows an investor to have both long and short positions in a portfolio. When the market is moving in any particular direction, it's still the magnitude or the strength of each individual stock that the simple scanning techniques of candlestick analysis allows to recognize which ones are still acting strong and which ones are acting weak. That'll be it. We'll see you in the chat rooms.